The market goes up and it goes down, does those two things, and that's all the market will do. And I'm going to show you how to become profitable today. I'm going to take you to the charts and show you what I've been doing for the last 30 years and what's worked for me over the period of time that I've been trading. I'm going to show you how you can keep it simple without getting all complicated in your trading and paying $1 million for a trading course or paying a fortune to learn how to align the stars on the left with the stars on the right. I'm going to take you to these charts and I'm going to show you exactly how you can make a profit in the stock market, or at least become a break-even trader. The reason you're watching this video is most probably because you need that information, because you need that advice. But take my advice on this one, and that is, do not change the system every 5 minutes. And by the way, I don't give advice. This is just trading ideas. It's my information that I'm putting out there so that you can understand that trading is not about turning $100 into $1 million on the first day. That you can understand that trading is more like a career, and it's going to take you time to learn how to do it, because it's not about charts. It's not about little squiggly lines on a board and they bump into things and then they like a stop street, and it doesn't work like that. Because once you understand that the stock market is made up of human beings, then you'll understand how to trade. After we've been to the charts and I've shown you how to become a profitable trader by trading a simple system, then we can go and have a look at how the psychology and how the fear plays into how you become a profitable trader, how you can become a successful trader, because that is one of the most important factors. We'll also talk about why I think the market is a 50-50 game. I've been putting this out to everyone for a long time, that the market is just a 50-50 game. So many people disagree with me on that one. So many people will tell you I'm wrong on that one, and that it should be a 70 and 80-20 game or whatever. But unfortunately, guys, that's just not true. The market is a 50-50 game, and the only time you'll understand that is when you watch what I'm going to tell you after the charts. When you watch what I tell you about the psychology and the fear behind trading, and that trading is all about traders, buyers, and sellers. Once we get to that, that's when it'll all click together for you, and you'll understand what I'm trying to actually tell you. But before we get to the charts, guys, just keep in mind that trading is risky. Trading is a very risky game, and 70 to 80% of traders do lose money on a regular basis, and that if you don't like risk and you don't like losing money, you most probably shouldn't be trading. In fact, you should go and become a doctor, an accountant, a lawyer, a mechanic, whatever. But whatever you do, if you don't like risk and you don't like losing money, you probably shouldn't do this. Anyway, guys, don't forget, pop down to the description. I got a free Forex book for you there. Grab your free Forex book, run with it, and enjoy it. It's totally free. It's a PDF. It's there for you. For the members, the guys who join the membership, you guys get the video every day with the trading ideas and my trade of the day and that sort of thing. And you also get the list of trades, which I think which way they'll go, and that sort of what I believe those trades will actually do. But keep in mind, guys, trading is 50-50. I'm not always right. 50% of the time, I'm most probably wrong, but it's how you approach the trading and how you put the business plan together that's going to make you profitable at the end of the day. So when we come back from the charts, I'm going to show you how to do that. There are 3 ways that we trade the charts, and it's quite simple, really. The first way, let me look for something here. There's the US 500. The first way is simple, and that is with a trend. If the trend is to the upside and we've got market structure, we're looking at up, down, up, down, up, down, up, down, up, and so it goes on. And you keep looking for trades in these areas to buy, 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 buy. The one and the first way to trade is trading within the market structure. The second way to trade is our preferred trades in the range, when you're trading in ranges. So when you're trading in a range, it's trading between the support and resistance, and you know that it's going to hit resistance a number of times and it's going to hit support a number of times. And another way to trade is, of course, with where overbought and oversold situations. So when you get an overbought or an oversold situation, you can look at, for example, this Aussie dollar, US dollar. At the moment, you can't take this short because it's just going in a straight line. It's in structure and it's continuing on up. But let's say that this goes down and it breaks the structure and it starts going the other way. Then you can actually take a short trade on this product. But how do you know that it's short? Well, it's quite simple, really. All you need to do is take a trend line along here, put the trend line in, and when it breaks through that trend line, it's broken the trend and it goes back up, retests, and then it'll go short. So that's what you're looking for. So those are the three ways that we trade. But we want to trade without any indicators. Now, the indicators that you will need will be a support and resistance. So you will need some support and resistance. And then you can use supply and demand, and you can use fair value gaps and such like. There are videos on my channel about fair value gaps and supply and demand and that sort of thing. But we're not going to trade with that today. Today, what I'm going to show you is how you can get your support and resistance in. So what we're going to do, we're going to remove all these drawings. What you do is you say, look, this is in a range. I'll use the range today. It's pretty simple. You take it to the day chart. You go to the day chart. Once you're on the day chart, you put it on a line chart. Now, why do I put it on a line chart, you ask yourself? Well, it's quite simple, really, because we're looking for the closing prices. We're not looking for these tails because these tails are highs and lows, and highs and lows are not going to help you with your trading. What you want are closing prices. Closing prices are more accurate. Then what you want to determine is where are the points where the price is hitting and coming back most of the time. And from what I can see, that's more in this area here. So that'll be your daily resistance area. Even though it's broken through a couple of times and it's broken through there, that's your main area where the price tends to hit most of the time, the closing price. Where's your support level? It seems to hit around this area most of the time. So you could say that is a good support level. That's an area where it tends to get stuck and it doesn't seem to go further. While it has broken through once or twice, trading is a 50-50 game. There's no guarantee. It's not a line. It's not a stop street. This is not a line that's going to get stopped here because there's a stop street here. These are human beings that are taking trades. They're taking trades in the stock market. And at the end of the day, it's just a question of, this is an area where there's usually a lot of orders. This is an area where there's usually a lot of orders where people have placed stop losses, people have placed orders in the market because they believe the market's going to turn around there. Big professional institutions and such like. And that's why you're looking for a trade in this particular area. Now you take it back to the candles and you have a look at what your trade looks like in the candles, and this is your range. This is trading in a range. It was going up, now it's in a range. Just remember, these ranges can usually resolve to the upside when it's been going up. But what we're looking for here is to take the trades in between this range as much as possible. This also works on the upward trend and it also works on overbought and oversold. We don't need to go into that. I've got so many videos on the channel that show you how this system works. Now you take it back to the 4-hour chart, and then on the 4-hour chart, you have a look if there's any areas in the 4-hour chart where you might be able to find maybe a fair value gap, or maybe you can find a scenario of a demand or anything like that. Not seeing anything, but you are seeing a little bit of a trend. There is a little bit of a trend running along here. You might want to look at that and see if that's got any effect on the trade, and if it breaks through that trend, for example, and you know, I hate it when that happens. If it breaks through that trend, for example, see the trend might also be on the top here. So it's in those railway lines. And what you're looking at is if it breaks through here, you've actually got a short trade all the way down to support. Because what you're looking for is, will this trade between these two areas here? Will it trade off the resistance down to the support, from the support up to the resistance? But in between that, you've got some 4-hour levels. So that's for example something that might happen on the FTSE. Let's have a look at maybe the Euro US dollar as another example. I'm going to remove all the drawings on the Euro US dollar, and we're going to do it again here just to give you an example. So if you go here to the day chart, now this one is not trading in a range. This one is trading in a trend, and it's an upward trend on the day. You see it's going up, back, back, up, back. So what you're looking for is long trades from these areas. Your preferred trade on this product is actually long because it's going long, but you can take short trades on it if you need to. So now what you're looking at here, you're on the day, put it to the line chart, and let's get a general resistance off of this line chart. So what we do is we say, now there's definitely an area here where it keeps on bumping into. Then there's also an area down here that you could say is very much a support level on this product at the moment. Why did I make it so big? It was a mistake. Okay, there we go. Also, what I see, it's in a trend. So take yourself a trend line and just draw it in here and just see what you get. Now, the trouble with this trend line is you've got this breakthrough here. It's broken through. So it's not a strong trend line, but it is a strong trend. So I'll work with this trend and I'll work with this trend line as best as I possibly can. You can actually see it is running in that trend because there's the other one there. It's running in that railway. There's a little bit of a break there, but it's not a big deal. Normally you want 3 points for a good trend to be real. And if you can get a trend to give you confluence in this area where you've got your resistance or your support, that helps a lot. You see there was confluence there on that support and it hit that trend support and both of them actually paid off for you. So there you have your resistance, your support on the daily, and you've got your support and resistance on the daily for the trend. Take it back to the candles, that's what it looks like, and take it back to the time frame you're trading on. In my case, it'll be the 4 hour. And if you look at the 4 hour, the picture looks slightly different because firstly, this trend looks huge in comparison and your support and resistance areas are there. But these are your daily levels. Now you're trading basically on a 4 hour level, which is a different time frame. What I can see on this 4 hour level is we have a demand area which has built itself in over here on the 4 hour level. And if you look at that, the big thing to look at with that is if this comes down, it's going to have confluence with this trend support. So if it hits this level, it's probably going to be a reasonably good buy. And then you can buy it out of this level, carry on long again. So that tells you that there's a very strong buy in that particular level. So that's how you trade without indicators. Now, you'll say, but there are indicators. There's trend lines and there's support and resistance. I don't consider that to be indicators. I consider that to be me just drawing things in so that I can see where the levels are. You don't need that. After a while, you can actually see the picture without these things in there. What it is we don't have any of these fancy fandangled major indicators that are available. Look how many indicators there are available to you if you want to trade with indicators and systems. And if the moon aligns on the right with the stars and the stars on the left align with the stars on the right and the moon turns into green cheese, then you can take a trade. No, we don't trade that way. We simply look at where the market is and we take a trade based on that. So yeah, that is basically how you would look at a chart and how you would actually trade a chart on any given day without all the lagging indicators. So now you've seen the charts and now you know what the system's about. It's pretty simple, pretty straightforward. And I got a whole bunch of videos on this channel that will show you all the different ways that you can approach those systems, that you can approach the squiggly lines and you can take your trades. But it's not about the squiggly lines. It's about how you approach the business and how you take the trades. If you take all the squiggly lines off the chart and you just decide that I'm going to buy today or I'm going to sell today, you're getting exactly the same result. But the reason I draw the lines in is so that I can see how to manage my risk. And that's the most important factor of your trading, is managing your risk. Once you learn that you have to manage your risk, you learn to become a profitable trader. Once you learn how to lose, you become a profitable trader. Now, how do you manage your risk? Let's say I'm going to use round figures because I know all of you don't have this size account, or you have bigger accounts, or you have different size accounts. Some of you have 25,000, some 50,000, some 100,000, some $1 million accounts. I don't know. But I'll use a $100,000 account because it's so much easier to work with percentages and round figures. So let's say you got a $100,000 account and you want to take trades on that $100,000 account. Now, I'm not talking about the funded trader account or anything anything like that. We've got one of those as well, which we do the live shows with every Tuesday and Thursday. So come back tomorrow for the live show and come and have a look at how we trade on the funded trader account. And that one's a $25,000 challenge account. But what we're talking about today is how you can trade an account. Now, let's say you've got real money, real cash. We're not going to talk about funded rules and all that rubbish. We're going to talk about real money. So you take $100,000 and you put it into a trading account. So I'm going to trade this $100,000. Now, most traders will jump in there with a lot of fear and they'll just trade whatever. Just, I'll take this trade, I'll take that trade, I'll take that size on that trade and that size on that trade. And because you think you can trade one thing better than the other, you'll trade one trade bigger than the other and the other trade smaller than the other. And this one's a little touchy, so I won't trade it so big on that, and so on and so on and so on. And you'll have a whole mishmash of wins and a whole mishmash of losses. And then you'll say, I've got a win ratio of 70 to 1. You know, I'm like, I got a 70% win rate. What's your profit? How much profit are you making? Do you ever ask that question? How much profit are you making? Let me tell you something right now, guys. Your win rate is worthless. The win rate means nothing to me. If someone says to me, I've got a win rate of, I just stop listening because you're talking rubbish. I'm not interested in your win rate. I'm interested in profitability. Now, how do you attain profitability when you're trading? You'd say win rate. No, it's not the win rate, guys. It's actually the psychology of trading. What you got to do, every single trade you take on this $100,000 account, you must say, I'm going to have a limit stop loss, $1,000 on every single trade. And I'm not going to change that, okay? I'm not going to have a $2,000 stop loss or a $3,000 stop loss on some trades. Every single trade, no matter what I'm trading, whether it be the US 500, the FTSE, the US dollar, euro, whether it's the Aussie dollar, new US dollar, doesn't matter. I'm going to have a $1,000 stop loss. So when you take the trade, the first thing you've got to decide is how much of a trade can I take with a stop loss here of $1,000. Then you can work out the size of your trade based on that $1,000 loss against the amount of stop loss that you want to put in or invalidation area that you want to put in. So you want to say, if it gets to this area, my trade's no longer valid, so that's $1,000. How big can I make my trade based on that? Then you got to look at the trade as, can I make $2,000 on this trade at least? Because now I'm taking $1,000. I'm paying $1,000 for this trade. I got to know that I can at least make $2,000 on this trade or close, because otherwise I'm wasting my time. If I can only make $500 on a trade that I'm taking $1,000 risk on, then I've got a negative stop loss. I'm really totally wasting my time because I'm never going to make a profit. Because the whole idea is this, guys. If you can make $2,000 or more on every single trade that you've put a risk of $1,000 on, then there's a very, very good chance that you're going to make a profit because the market's a 50-50 game. What I'm saying to you is that if you take 10 trades, 5 of them you will most likely win and 5 of them you will most likely lose. To lose all 10 in a row is really bad luck, and to win all 10 in a row is pretty ridiculous luck. But you'll get changes in that sort of strategy. You'll get some days that you'll win more and some days that you'll win less. But on average, throughout a year, you'll win half the time and you'll lose half the time. It's like flipping a coin. It's just the way of the world. And you'll say, but my strategy gives me a win rate. Just wait a minute. Every strategy gives you a win rate. Every single trader that gets into the market to trade understands that they're going to win when they trade. Do you think they get into trading to lose? Do you actually believe that there is one trader in the world that's getting into trading because they believe they're going to lose at trading? Right, so let's put that behind us. So every single trader in the market wants to win. What are you trading against? Are you trading against squiggly lines? Or are you trading against those traders that want to win? I rest my case. It's a 50-50 game. You've got a 50% chance of winning, right? Now, do you get it? Do you get it? Do you understand what I'm trying to tell you here, right? Now, you get into the trade and you get into $1,000 loss. You've paid for the trade. Do not move your stop loss down. Do not make it higher. Take the $1,000 loss. If you take 5 losses at $1,000, you'll have lost $5,000. If you win 5 trades, $2,000, you would have made $10,000. You've got a $5,000 profit. Do you get that? Does that make sense? Now we're starting to get the picture. Now we're starting to get a better picture. It's about profit. It's about profitability. It's about not taking loss. Now you've got a trade trade. You've paid $1,000 for it. It's running. It goes $1,000 into profit. Now you're sitting with a $2,000 stop loss because you're $1,000 in profit. Do yourself a favor. Take the stop loss, move it up to cost. Your trade's now free. But don't get out of the trade because the fear in your mind is telling you to take that profit and run. But then you're defeating the object, you're wasting the time. I'm not saying you can't do that. I'm not saying you should never do that, because sometimes gut feel has got to tell you this trade's run out of time. Let's get out of it. Let's take the money and go. That's the natural form of life. But what I'm saying to you is, if you have a plan with a trade, try and follow the plan. So the plan is to make $2,000, but you don't want to lose any money. So move your stop loss up to the cost and let the trade carry on running. And if the trade carries on running to the profit level, don't take the profit. Move the profit level higher. Move the stop loss up to about $1,500 behind that profit. And if it comes back, you make $1,500. It's not the end of the world. You are still in profit and things are looking up. What you're looking for effectively in the stock market is that big trade. And those big trades do not come around every single trade. So what you're going to have, because of moving your stop losses up, because of having to put your stop loss at cost and bring things up and try and save money here and there, you're going to have a whole mishmash of losses and a whole mishmash of wins. Small losses and small wins. Because you want to make your loss as small as possible. If you see your trades invalidating and it goes $200 into loss and you think this is just, I'm not going to leave it to go to $1,000 loss because I can see this thing's not working, just get out. Take the $200 loss. So what I'm saying to you is, you're going to have a whole mishmash of little losses and a whole mishmash of little wins. And then you're going to see a win rate of 70 or 80%, and you're going to say, wow, I'm a great trader. I've got this win rate. That win rate is meaningless, right? That's your system doing its thing. The system is there so that you can manage your risk and you can make those little profits. Those are the little profits that you're looking for. Those profits grow big. So run with the long trades. Don't run with the short trades. Don't try hedging your bets. Don't try adding to your losses to hedge it down and get the money back. You're wasting money. It's going to get worse. You know, when you try and hedge a loss, when you try and add to a loss so that it can break even and come back and get you out of the trade, do you know what happens? The loss gets worse. And then you say, well, I'll add some more. And then it gets worse. And you'll add some more to the point where you're going to blow your account, or you're just going to be so deep in that you just can't take. There is a point, a threshold point, where you're just like, I can't take these thousands of dollars loss anymore. I'm 20,000 in loss. I'm going to get out. That happens all the time. Now, with this system, if you've got 10 trades in and each one's got $1,000 stop loss, let's say you don't lose all 10 trades, but you've got a $10,000 risk on the account, and you're saying, well, now I've got a $10,000 risk on the account. Yes, but it's spread over 10 trades, and you should win 5 of them and maybe lose the other 5. And the 5 that you win, you want to make double what you're losing on the losing ones. And that's as simple as it gets. Place your bets on the winning trades, not on the losing trades. Get out of the losing trades. Let them go. Take small losses. I hope that helps you. Don't forget to come back for the live video tomorrow. Tomorrow we're live again for the US session, and we're going to talk a little bit more about all these fandangled psychological things that go through your mind to make you a profitable trader. Guys, thanks for watching. Until the next video, and until I see you tomorrow at the live show, don't forget to come back. Cheers, ciao, and bye.